afternoon, everyone. I'm Laura Barger, Chief Marketing Officer at the Financial Health Network. Thanks so much for joining us today. I'm really excited to be closing out this terrific day of content with a discussion on consumer trust. Over the last few hours, we've been hearing a lot about action, right? About things that organizations can do around financial health, whether it's measurement, paying attention to data, and it's such a critical component to how consumers view organizations, like what they're actually doing on behalf of the consumer's best interests. Over the last couple of days, we've been talking a lot about the data that we published recently from the 2020 US Financial Health Pulse Trends Report. We also do deeper dive studies throughout the year that leverages that data to really look into certain trends, to certain opportunities or demographics. And we recently published a study based on our 2019 data showing a really strong correlation between whether customers believe their bank or credit union or financial services organization is supporting their financial health, and their and how that relates to their satisfaction, to their willingness to recommend the organization to a friend, and their interest in either exploring or holding additional products. The narrative that really brings these points together is trust, and trust that an institution has the consumer's best interests in mind, particularly during a time when things like data access and privacy are huge topics of conversation. This is a really interesting topic, in particular during this time of the current pandemic and the economic climate, when institutions, notably financial services, have been called to help with things like stimulus planning and disbursement, as well as debt and payment relief. The idea of trust and how it plays into consumer consideration is not actually new. And there are several organizations that specifically focus on measuring and analyzing trends in consumer trust. So I am actually delighted to be joined today by two guests to discuss specifically how financial institutions can build strong consumer relationships and the role that trust in financial health plays. So I'd like to welcome Deidre Campbell, who is the Global Chair and Head of the U.S. Financial Services business at Edelman, a global communications firm and the organization behind the Edelman Trust Barometer, and Bob Neuhaus, who is the practice lead for global financial services at J.D. Power, a company synonymous with the customer satisfaction ratings across industries. So welcome to both of you to our closing session of Emerge Insights.
Thank you.
Awesome. So I just want to kick right off by acknowledging that both of your organizations have long-standing approaches in measuring consumer relationships to businesses, with financial services organizations in particular. So I'd like to actually ground us with just an overview from each of you on how your companies go about measuring trust, as well as any notable changes in the trust that you're seeing in financial services institutions, particularly coming out of this year. Deirdre, let's start with you in talking a little bit more about the Pulse, the Trust Barometer.
Yeah, thank you. So the Edelman Trust Barometer is on its 20th year of global research. It is research that looks at trust in government, business, media, and NGOs with 33,000 respondents across 28 markets. The research takes place every year. It's in the field middle of November through middle of December, and it's launched at the World Economic Forum on the opening morning and really sort of used as guideposts throughout the week to guide conversations about the state of trust around the world. We look at trust in countries and trust in sectors as well. By the spring, the sector cuts come out, and I get busy with the financial services sector cut, really looking at trust in the sector and looking at what trust building looks like so that we really have actionable insights to work against. But this year, we launched it in Davos in January, and by the time we got to March, it was completely irrelevant. The world had turned upside down, and everything that we had been measuring didn't seem to matter anymore. And we wanted to rush right back out into the market and start understanding what really mattered to people. And so fresher data came back, smaller data set, 11 countries and 13,000 respondents, but just in order to move quickly, And we saw a significant rise in trust in the financial services sector. So the financial services sector has always been the least trusted sector of all the sectors that we measure, but now it's jumped quite significantly. It has jumped 5 points. It has been 6 points for global financial services and 5 points for banks. And we begin to sort of ask ourselves, so what do you think that's all about? In understanding the trust results, we look at the headlines in those markets at the time in which the research was in the field. And we were really seeing financial services playing the role of economic first responders, kind of in the trenches on PPP, whether it was going well or not, they were sort of there and performing that role. We saw, auto insurers giving back premiums without even being asked because people weren't driving around in cars. We saw lenders giving loans ahead of stimulus checks. And we also saw a financial services system quite different from that suffered the global financial crisis, because the stress tests and the regulations put in place seemed to be holding up and giving us markets that were more liquid and more able to support sort of in those early days. I mean, since we've been hearing, a lot of money going to a lot of issues, but is the real work getting done? So certainly there's still work to be done, but we're trending in the right direction, at least according to the Edelman data at this moment.
Interesting. And so, Bob, I'll turn it over to you. I know that you field supplemental research here too, and in sort of the conversations leading into this panel, it seemed that you saw something a little bit different. And so I'd love to get a sense from you, like how you field the data and what you've been seeing in particular during this year.
Sure. Historically, we've been in the market on a quarterly basis, measuring satisfaction, NPS, and trust. And as soon as the pandemic hit, we recognized the need to do that even more frequently. And for a number of months, we were in the market biweekly measuring these elements. Since March, we've conducted approximately 100,000 interviews in the US, measuring satisfaction, trust, financial or behaviors that consumers have had in response to the pandemic. And measuring their financial health. And what we saw that is similar to what Deidre just described is we saw a bump up in the performance metrics, including trust, immediately after the pandemic hit, but it then subsequently fell off. So I think that customers were very appreciative early on to be able to get through to their bank, even if it took a long time on the phone, for example. But then as the summer wore on, I think we're seeing an element of fatigue setting in and frustration. And I think that's caused the numbers to come down a bit. The other thing that we're seeing is a bit of as you heard in the media, the K-shaped recovery, where those who have strong financial health are continuing to give positive responses about the banks. And those who have poor financial health, which is a growing population, are increasingly critical of the banks. And that plays out whether it's satisfaction or trust or loyalty. So we're seeing pretty complex dynamics with that.
So that's really interesting. And I would say that in some ways it mirrors a lot of the things that we saw coming out of the Pulse Trends report, which is that the improvements that we're seeing and some of the hypotheses around that is that moments in time, right? Stimulus kicking in, giving people a momentary sense of stability, but the equitable kind of financial health issue is starting to see the chasms are widening a bit. So I think, what I'd like to, and I'll stay with you, Bob, on this one, just because I feel like it's a good continuity to what you were just talking about, is that to me actually speaks to what is the short game versus long game, right, for financial health when it comes to how banks and financial institutions deploy it as a strategic pillar in their organization. It's interesting that Deidre called it a first responder moment, but first responder versus long-term, like resilience and care, I would think would be a significant point for institutions as they're thinking about their financial health strategy. So from your perspective, what do you think needs to happen now? Like how do banks and institutions deal with the fall off in the trust? And what are some of those key things that organizations need to take into consideration so that it doesn't end up being an incredibly detrimental trust situation?
Sure. I think how you measure bank performance really depends on where you set the bar for the banks in the industry. And if the bar is set on the basics like keeping my money safe, giving me access to it when I need it, the banks are doing a really solid job of those basics. The basic functionality of digital is strong. But as the population of people who are having poor financial health increases, the need for banks to step up to that challenge is critical. We hear a lot of talk in the industry. There have been some new tools introduced that support financial health, but I think we're in the very early stages as an industry of truly supporting the financial health of customers. We, for example, have found that 80% of customers are looking for advice and guidance, but just roughly 30% are getting it. So an enormous gap between the need for financial advice and guidance and what people are getting. They're desiring that more and more through digital channels, and that's still not playing out in the industry. So there's a lot that needs to be done there. I think financial health should be thought of more as white space for banks to differentiate themselves, whereas the more traditional way of thinking about banking, getting the basics done, is really the table stakes. So as you look forward as an industry, this is a great opportunity to do something different that's very much needed by the population.
That's great. And Deidre, I want to turn this similar question over to you, but with a little bit of a twist, because I feel like in particular, one of the things I've been thinking about is how has it affected the way that we actually think about these surveys, right? Are we asking the right questions? Do we think we're getting the real sentiment from people? Has Edelman given any thought to sort of how the questioning might change? And what do you think maybe changing some of that data and going deeper into these areas of equity might affect the study moving forward?
So there's a couple of answers to that question. Kind of on the first piece of it, are we thinking differently about it? Not in some respects, because we're always looking for the actionable insight. So not just the state of trust, but what does it mean to financial services companies and how can they help improve trust? And so alongside just kind of the benchmark questions that we want to know in terms of the state of trust, we went back into the market in September to really try to understand how people were feeling about what it was going to take to get through the crisis. And the focus of that research was everything, how are the sectors going to help people get through the crisis? And interestingly, of all the sectors that we surveyed, financial services came out again on as number one in terms of the sector that consumers expected to help get them through this crisis. And then we asked them to sort of rank order what it was specifically you're looking for from the sectors. And it was accessible to information. It was affordable products and services, and it was protect the safety and well-being of me, my employees, my community, and my customers. And what was interesting about that is not only was financial services the top in terms of the expectation, but also had the largest delta between how much the world expected these things from the sector and how well they thought the sector was doing. So that really uncovers for us, areas that our clients can go back and work on and kind of ask themselves and measure themselves against. Are we doing everything to protect our communities and employees and customers? Are we making products accessible and really thinking about it in innovative ways? I love this announcement that came out yesterday from Greenwood and Killer Mike and the products that the company that they're rolling out to help eliminate payday lending. And which is, really sort of snags the most vulnerable and so really sort of in ways that are sort of, unthinkable. So we look at it in terms of actionable insights, but then you asked if we're digging deeper or doing more. We have launched a new product called Edelman Trust Management. We launched about a year ago, and now it's turning into a suite of services that allow companies to undertake bespoke research about how well they're trusted across ability, dependability, security, and purpose, and then measuring them against their competitors. And again, giving them a benchmark and also giving them metrics to measure themselves against, really trust building metrics that they can take into the boardroom.
That's interesting. That actually leads me kind of into the next thing that I wanted to ask about, which is, when these insights become available, right, to industry leaders and to the organizations that you speak to, I'm assuming that generally the feedback and the discussion that comes out of seeing this data is pretty consistent year over year. What do you feel like they're going to, how do you feel like leaders and sort of strategic owners are going to take this year's data? What do you think the general reaction is going to be? And do you think it's going to be any different? Or do you think you're going to see any different action? I'll start, Bob, with you on this one.
Sure. I think the topic of financial health has grown in importance this year. And I think it's also in the context of a changing business model. As employees are now working from home instead of working in large contact centers, as digital has grown dramatically. Digital was already growing dramatically, and it accelerated at a much faster pace. The population of unhealthy, sort of from a financial point of view, customers is getting a lot of attention. I don't think the solutions have been put in place. I also think that as we talk about financial health, you also need to consider the topic of financial literacy at the same time. And we recently measured that and asked the most simple questions that come from academia on this. And 55% of pre-boomers and boomers passed these 3 questions. Just 9% of Gen Z passed those questions. These are questions about what is inflation, how do interest rates work, and what is stock diversification. These are urgent issues that need attention from the banks. I think they're applying that attention. But as I said, these solutions are in the kind of the early stages of impacting the marketplace in a significant way.
Deidre, how about you? Any thoughts on how you'll see any differences in reaction or conversations that you think will come out of this?
So I'll walk back to that in a couple of ways. As it relates to financial literacy has been a huge problem in this country for decades. You know, not understanding the power of compound interest, it puts you right back into the have and have nots category. And I think there are organizations, many organizations that are taking it on. I'm proud to work with the Council for Economic Education, who's been around for 65 years, and they come up with they create the curriculum to give to the teachers K through 12, because financial literacy is not math. It's a different thing. And teachers, if they can, going to be given this curriculum and trained, they can help. Employers also need to be undertaking financial literacy initiatives and helping them teach their employees what to do with their pension savings and their retirement savings, and thinking about your financial security big picture, and looking at retirement and the importance of saving early. And in terms of sort of counter to Bob's point on digital, I think that digital banking products have obviously been around for a very long time, and they've been very good in many respects. And I think that people, if they didn't use them, they had to start using them overnight, and found that they stood up pretty well. But I also think that, and when we see some of the trust numbers getting wobbly, particularly in Bob's data, is the lack of human touch. Have we tipped to, you're not going to the brands, you're talking to chatbots more. The product does more for you, so there's less of a human connection. So always sort of struggling to find that right balance. I was on with a financial securities provider the other day and talking to a chatbot, and the chatbot said, I'm a little young and my algorithms aren't quite there yet. Let me transfer you to one of our friendly humans. Like, just instead of putting some personality into the brand and into the technology that makes people feel like there's still someone on the other end there for them.
It feels like that would be particularly poignant, I think, in this situation, right? Just to the point of, hey, it took me a long time to get through to somebody at my bank, but I did get through to somebody at my bank. It almost feels like I don't want to say reverted, but there's a certain kind of comfort in knowing that you're connecting with other people, especially during a time of kind of volatility and crisis. That's been pretty interesting. Well, we just have a couple more minutes. I did get one audience question that it takes us in a slightly different direction, but I'll just throw it out there and see if we have a couple of words on it. Is that obviously what has happened during the pandemic and the response to the pandemic has been significant this year. But generally speaking, where do we also see the role of how institutions are showing up in terms of philanthropy and how they're showing up in terms of public relations and sort of their overarching brand. Do you think that those elements have been influential in trust this year, or have they really been sort of pushed to the side a little bit more, just given the attention that people are paying the kind of first responder type of characterization of the institutions? And I'll leave it with Deirdre for this one.
Yeah, it's interesting. I mean, when the crisis first hit, you would see companies giving $5 million and $10 million, and all of a sudden that looked like a tiny amount of money, and then it was $130 billion and upwards. Certainly, I think that the financial institutions have rushed to support through the Black Lives Matter, supporting Black businesses. I love the work that you guys did with PayPal on the employee financial health and some of the other stuff. You see some of the fintechs and the institutions with big dollars, but now I think it's important that they go in and stand up the programs. We always say you can't do the telling, you have to do the doing. Mm-hmm. And it's time to get busy with the doing so that we have a long-term systemic effect and can support greater financial security ahead.
Yeah. And Bob, any final thoughts on that?
Yeah, I would just add, we've asked people to evaluate their bank on their COVID response and gotten into some of the specifics about what has impacted that response. And not surprisingly, based on what you're just saying, that the support of the community, the support of the employees, that type of thing is resonating strongly with consumers and means something to them.
Great. Well, again, I want to thank both of you so much for joining me today. I think this is a perfect way to close out the conversation and all the key themes that we touched upon. So much appreciated, and I hope you have a great afternoon.
Thank you for having us.
Thank you.
Okay, bye.